Hello and welcome back together to this weekly update on the financial markets. One day late on Monday here, but better late than never. I will cover with you today, like always, the S&P 500 index, US oil, gold, and Bitcoin against US dollar, and what follows afterwards are the add-ons, single stocks, cryptos, indices, etc. I'm trading right now, or I'm willing to trade in the near future. So you see all my reasons why I will take a trade or have taken a trade, and I have a look at the weekly, daily, and most of the times here for our time frame. Let's start directly in with the weekly time frame and the S&P 500 index. S&P 500 index, like promised on the weekly time frame, you can see the index is making higher highs and higher lows following each other, so an intact long-term uptrend. MACD is pretty exhausted, price is also rising without any pause, so that would be healthy for a smaller pullback to continue the overall uptrend further for a longer duration. So I'm expecting a pullback since a couple of weeks right now. So yeah, never bet against the trend. One exception, if you get signs that the trend is shortly over and you see corrective move. I'm not willing to go short right now because I think that thing is hell a lot overbought. No, I will want to see a lower low in a shorter time frame. More to that later. You can see MACD indicator is pointing downward while prices are rising. That's a divergence, and normally what follows after divergence is a correction. It doesn't mean a bear market or a crash, only a healthy correction. I went out a little bit early out of my long trade. I was capturing a part of this uptrend move here with a long trade. I was taking profits, I think it was around this area here. And so I let this S&P 500 run to the upper side without me on board. Yeah, I'm trying now to catch a little bit from the potential downside. So I already set my sell stop order. If we see this two lows getting exceeded to the lower side and the daily uptrend broken, and my stop loss is placed at the prior all-time high and my take profit is placed at the next support zone. You can see it later better at the 4-hour time frame, aiming only for 1.13 times my risk, so a little bit smaller than normally if I'm trading to the long side. The risk reward ratio is in rising stocks always greater to the long side than to the short side, because corrections normally don't make that huge moves that they make to the upper side. Yeah, everything else on the long term is bullish. So for investors, stay in the game. Maybe if you have trading positions, take some profits from the table, not the whole position, but some profits maybe, and make decisions like always by yourself. For my part, I decided to get out of the long position here, and I'm now speculating on a pause in price and a pullback, only small, not even expecting to get all the way back down to the major last all-time high, but maybe here retesting a 200 moving average or something like that. If we come down, I will only make risk 0.5%, so I will only make a little bit more than 0.5% of my account balance, so I want to take a small profit. If we see prices rising higher, making new all-time highs without reaching this entry level, I will delete that trading setup, and that's fine because my long-term investments are rising. You can see it like a little small hedge. Yeah, that's all I have for the S&P 500. In a conclusion, absolutely bullish for the longer perspective, expecting a smaller pullback, and afterwards, again, rising prices, continuing the overall uptrend. Next, US oil. Oil is pretty interesting right now. We had this weekly or even red monthly downward line that won't get broken to the upper side. Since then we are in a weekly correction marked by this weekly orange solid downward line. We have seen maybe the lowest point of the movement already. We have seen a violation to the upper side, then a correction. Haven't seen since then a lower low. So maybe that's the breakout that just needs to get confirmed. I'm absolutely sure on the bigger time frame, if we see price rise above this 200 moving average, because that was support in the past and resistance in the near past, and think if we get above that, maybe looking then something like this. This scenario here for me, I would get really bullish for oil and trade probably aggressively to the long side. But till we see that, I have to do something else with oil. You don't have to trade, but I like to trade because of that. I'm looking for possible setups. Yeah, we have seen the lowest point. We have seen a break of the major daily downward line. Then an A, B, C correction. We found here bottom. Price has struggled to fall deeper than this zone around $61.50 per barrel. We have seen a low, a higher low, or a high, a lower high, and higher high. So changing from a downtrend to an uptrend on a smaller time frame. If we go even further to the 4-hour time frame, you can see it more in detail. Yeah, we have even peaked slightly with the candle wick here above the prior major high, at least at the lower time frame. And yeah, then we collapse back down. For me now, if we see prices rise again above these two highs here, I place there my buy stop order. I want to go in a long trade for US oil and ride these prices higher, because I think then maybe the correction, this A, B, C correction can be over, and I would at least speculate that we'll see the highs from June again, mid of the year. And my stop loss is placed below the lows where price struggled to fall deeper. I'm risking 1% in this trade if my entry point gets triggered. If we see price fall below my stop loss level before we see that trigger, I will delete the setup and continue analyzing maybe to the downside. We will see readjust this downtrend line, etc. You know it if you follow me a little bit longer. That's my idea for oil. Next, I would say let's switch to gold. Gold against US dollar on the weekly time frame. So each candle represents 1 week of price action. We can see we struggled a long time with this area around the $2,000. After we have finally seen the break to the upper side, we have just known one direction, and that's up with small pauses in between. And here the pause down, the corrective move wasn't really a corrective move, I would say. It was more time-based. We consolidated to the side, and then we finally broke out of this sideways consolidation to the upper side. And since then, another rocket started to the upper side, aiming for the $4,000 level in gold. There I entered already a long position, like you have seen it in past episodes, with a stop loss below this sideways consolidation. Yeah, it's stretched definitely to the upper side, but a chart that looks like that can stretch even further before we see another corrective move. On the daily time frame, you can see it in more detail. You see this triangle-like pattern I was drawing in here. And finally, after seeing the last two highs getting taken out, I entered long with a stop loss below the last significant lows of the structure and was riding that trend up with 2% at my stop loss level, risking for a 2.5 risk reward ratio, aiming for take profit slightly below the $4,000 mark, because the $4,000 mark is a psychological mark where a lot of participants are probably selling. I don't want to get into that area where people are selling and I'm not able to take my take profit at the best price. Yeah, at the moment 3.9% in profit of the total account balance. That's pretty sweet. We'll write that higher if we see a pullback before I reach the take profit, and then taking out the prior high. Then I will also move my stop loss to my entry level, and with that I would take the trade risk-free, so I can only hit the take profit or my break-even level. So I will lose nothing on this trade except the fees I paid for getting in this trade. Yeah, pretty bullish for gold. Even a pullback is buyable for me. If you have no position yet in gold, it's a little bit volatile right now. So yeah, what can shoot up like gold here in this case can also come down significant. So be aware of that. Next, even more volatile, Bitcoin. Bitcoin against the US dollar, also starting at a weekly time frame. You can see since the low in December 2022, we have seen higher highs followed by higher lows. So also an intact uptrend. The only concern I have right now is this MACD divergence on a weekly time frame that speaks for a corrective move. The question is, how deep will this correction go? Or will we really see one? Because that's no guarantee a divergence in price to MACD. We reached already the first Fibonacci extension level measured from the low to the high of the last major movement. And my target is placed slightly below the second Fibonacci extension level, around $145,000 per coin. That's absolutely reachable in my opinion. If we drop down to the daily time frame, you can see that I entered the trade after the last break of the major downtrend line. Since then, I'm riding this trade higher and also increased my position since then. Every time we have seen a major pullback and then a break of this pullback to the other side. Lately, we have seen a double top, then pullback. I was expecting an ABC pattern, so this leg here should get a little bit lower. Can still happen. We will be only sure that this is a legit higher low after seeing price exceed the prior high. And then I think we would aim for new all-time highs again in Bitcoin. And this correction is finished. And it would have finished perfectly at the prior daily support and resistance zone. Would be technical pretty clean. And yeah, then I think nothing stays in the way for nearing the take profit target I have chosen for myself for Bitcoin for this cycle, aiming for 7.7% in my account balance. At the moment, risking $2,000 or 2% on that trade. I wanted to let Bitcoin a little bit more room to breathe. So even if the corrective move would have gone all the way back down to this weekly uptrend line, then I'm still in the trade, even with a little bit book loss, but then it can readjust and continue this rising path, because I'm a pretty heavily believer in this 4-year cycle of Bitcoin. And if we look at that matrix or the strategy, then the highs are probably not in yet for Bitcoin. Yeah, riding that one higher. If you are not in a position and you want to get into a position, I would say we zoom a little bit in at a 4-hour time frame. Yeah. And then you can take a downtrend. The downtrend is at the moment here, because this here is not a lower low. That one is higher than the prior one, so that's the real downtrend line. But if you want to be sure, draw the downtrend line like that one and wait for push above that, and then get long here at this situation. That would be my personal setup if I want to get into a new position. I'm already in a position. Not sure if I want to really increase it right now, because I already maxed it a little bit out for my standards and my risk management. Yeah, personally, still invested long-term in Bitcoin, and that will not change with that ending cycle. That's all I have for Bitcoin right now. Bullish, stop losses placed pretty securely right now, letting it room to breathe and aiming for that last moonshot here. That's all I have for my 4 main assets. What follows now are the single stocks, and I go through them a little bit faster and not in that detail. Starting with the single stocks and A.O. Smith Corporation, we had 3 similar situations. 2 of them have been completely in the past. One of them is downtrend, hopefully in the past. And what I'm aiming now for is the rising part of this pattern. And I'm already in a long trade. And yeah, head and shoulders formation, breakout to the upper side, supported by the 200 moving average. I went long, stop loss below the prior low, risking 0.5% of my account balance, like so often in single stocks, aiming for 2.4 risk reward ratio, far below the prior highs. Yeah, it's taking a little bit a longer while than expected, but I made the plan in advance, and I will hold the course. Next, Netflix. Netflix on the daily time frame. I backtested that one on a specific setup. MACD cross to the upper side, below the MACD 0 line, and price above the 200 moving average on the daily, and then taking out a major high. In this case, it was that one. We came back down, we got above it and entered long. Since then, we're moving sideways. I mean, I think it was a 60% chance of winning statistically, historically, over a decade backtesting in Netflix, and I'm aiming here for a 2-to-1 risk-reward ratio, and aiming for that at the first Fibonacci extension level, measured again from the low to the high of the last movement. Next, Investor AB. Investor AB also on daily time frame. It's a long rising stock. One moving average was support and path, then resistance, at the moment resistance, and I think if we take out the prior highs on this sideways consolidation and the 200 moving average to the upper side, that's a good situation to go long in this stock. Stop loss below the prior lows, aiming for also a 2-to-1 risk-reward ratio, staying also below the first Fibonacci extension level, so we should reach that level comfortable. That's all I have for Investor AB. Next, the hot stock Tesla. Tesla Inc. on the daily time frame. We have seen an all-time high, then a massive crash to the downside, broken downtrend to the upper side, moving inside in triangle formation, breakout of the triangle, pullback, break of the pullback to the upper side, getting in a long position, and then the explosion to the upper side. The take profit is placed slightly below the prior high because that's again a resistance zone probably, and my stop loss is placed below the midpoint of this triangle formation and 200 moving average. So far we haven't seen a real pullback and a break of the pullback to the upper side. Because of that, I haven't moved my stop loss to my entry level to take the trade risk free, but we are pretty near my take profit, so probably we will reach a take profit without seeing a real correction in advance. Then I take the 2 times my risk as profit. Next, Berkshire Hathaway. Berkshire Hathaway, you all know that stock, and it's rising long term to the upper side. We have seen a breakout of the price channel, getting support by this daily white solid uptrend line. We have seen a break of the secondary daily downward line to the upper side, and also price above the 200 moving average again after seeing a MACD divergence to the upper side. You have seen the pullback to the breakout level and the 200 moving average, and it seems like we are rejecting right now. Again, higher, slightly in profit, but near my entry level. Stop loss is placed at the low of the last major movement, and my take profit is placed 2 times my risk far away to the upper side, staying below the upper boundary of the price channel. That's Berkshire. Next, Snap-on. Snap-on Incorporated is a little bit longer right now on my watch list because it's in a nice uptrend with nice pullbacks and then rising parts. We have seen a pullback, we have a downward line, we have a daily support and resistance zone, 200 moving average, broken all 3 things to the upper side, so a bullish sign. And finally, we have seen also the last high here inside this consolidation taken out to the upper side, so my entry level got triggered, slightly in loss right now. My stop loss is placed good chunk below this smaller sideways consolidation on the 4-hour time frame, and my take profit target is 2 times my risk far away to the upper side, staying below the first Fibonacci extension level as my take profit. Yeah, I went in this trade, I think it was Thursday or Friday, I'm not so sure, or was it this Monday? Doesn't matter. Yeah, it was today. I set these trades up and then I not looking every day after them. It's a good thing to do on the weekend. Set up the trades and forget about it. Next, CrowdStrike. CrowdStrike Holdings is also massively rising stock with huge volatility. We have seen a nice massive pullback to this daily support zone in combination with the 200 moving average and the 0.5 Fibonacci 0.5 Fibonacci retracement level. Yeah, it's a retracement, not the extension. We come to the extension. Here's the extension, the first extension. Take profit slightly below that one. Risk reward ratio 2 to 1. In good profit so far. Haven't seen a pullback and a break of the pullback to the upper side right now, so I'm not moving my stop loss right now to my entry level to take the trade risk free, letting that run for this moment. Next, Blackstone. Blackstone Inc. is a rising stock as well. We have seen a nice pullback to the 0.618 Fibonacci retracement level from the low to the high of the movement. Since then we are again in an uptrend, printing higher highs and higher lows. And so this was no exception. We had an ABC corrective move. We had a break of the downtrend to the upper side and entered after exceeding this prior high in a long position at the moment in a loss. My stop loss is placed below this complete corrective move, and I'm aiming for a 2 to 1 risk reward ratio, staying again below the first Fibonacci extension level. Yeah, so far so good. For sure I can get stop out here and maybe retesting the 200 moving average for then continuation higher, but that's fine for me. That's my risk management takes care of that one. I will only lose 0.5%. Next, Alibaba. Yeah, if Blackstone is not succeeding in my trade at least, then Alibaba will for sure. Not for sure, nothing is guaranteed in trading. But yeah, we had an 80% collapse. Then we formed the bottom formation here, and we had seen the break of this major weekly support and resistance zone. We had a pullback and then another break higher, and that was the moment I went long in this stock with a stop loss below the 200 moving average and the major price action. Take profit is placed below the next major weekly support and resistance zone. So before there a lot of resistance kicks in, I will take my profit with a 2 to 1 risk reward ratio at the moment in a nice profit. If we see a pullback and a break of pullback to the upper side, will for sure move again my stop loss to my entry level and take the trade risk free. Linde PLC, nice uptrending stock. We had an uptrend that got broken. We went in a sideways consolidation between these two daily support and resistance zones. At the moment, retesting the upper boundary, slightly break. At the moment, again in a smaller sideways consolidation on a lower time frame. If we break that one to the upper side in combination with the prior all-time high here, then I want to get in a long position. So a breakout trade, if you will. Stop loss below the 200 moving average and a lot of price action in between. And I'm aiming for a 2 to 1 risk reward ratio around the area of the first Fibonacci extension level. That's it for Linde. Next, Toyota. Toyota Motor Corp is also an uptrending stock, even not that heavily like the tech stocks I'm covering also here. But we had a nice decline. Then we have a bottom formation formed, sideways movement supported by the 200 moving average at the moment. Price is above the last daily support and resistance zone. Found here some resistance and here some support. So in a smaller time frame, also sideways consolidating. And my guess is if we see the final breakout above this consolidation, I will get here in this breakout trade with stop loss below the consolidation and the daily support zone, aiming for a 2 to 1 risk reward ratio, and the take profit target is way below the prior all-time high in the stock, so absolutely reachable, risking like always or oftentimes 0.5% from account balance. Next, Applied Materials. Applied Materials, also uptrending stock with volatile corrections in between. We had such corrective move similar to the prior one. We had a breakout correction and break of correction to the upper side. We have similar right now here, downtrend, breakout, corrective move, break of corrective move to the upper side. I was a little bit earlier in because we have seen the cross of the 200 moving average and the price. And I went long because I had this nice 4-hour support zone here where I could place my stop loss entry level, and because of that I'm already 1% of my account balance in profit with this trade. And if we see a nice pullback and a break of the pullback to the upper side, I take my stop loss risk free. I think I'm stop mentioning that for the rest of the stocks because the concept is every time the same. It's no rocket science, really. Take profit placed at the second Fibonacci extension level and at the prior all-time high because there normally resistance kicks in. Next, ASML. ASML Holdings, the famous stock out of the Netherlands. Massive corrective moves here and also nice breakouts, pullbacks. A break of the pullbacks to the upper side, like here in history, happened exactly, or at least nearly like in the past here, and I was trading exactly that setup. Stop loss below the pullback, entry above the pullback, and riding that one now to the upper side. Take profit placed below the Fibonacci extension level number 1. 3-to-1 risk reward ratio this time. Sometimes the risk rewards are better than in other stocks. So in this one. Next, we have the stock CRWD. Not sure if I pronounced correctly, but that doesn't matter for the trading. CRWD Inc. You can see it's a nice uptrending stock. We are running into a huge, yeah, it's not a triangle. Not sure how you should call that one, but you see it often, and it's ideal for breakout trades. You see price stop every time at the upper boundary, and we have an intact uptrend that marks every time the low of the movement. And if you then see a nice valid breakout to the upper side, you can normally expect huge moves to the upper side. So I do with that stock. So I enter. If I see the prior highs taken out to the upper side, my buy stop order gets filled and my stop loss is placed below this daily support zone here, and yeah, way below the weekly resistance zone for price at the moment, then turning support if we break it to the upper side, aiming for a 2-to-1 risk reward ratio and the second Fibonacci extension level. Next, Viper Energy. Viper Energy is basically trading sideways since a couple of years. We had this weekly resistance zone here. That one got taken out with the last pull higher to new all-time highs. We had a nice setback to this weekly uptrend line and the prior resistance now turning support. So I think that's a good situation here. We had already a broken daily white solid downtrend line. And if we now see really a push higher, I want to get into a long position. Aiming for 2-to-1 risk reward ratio, stop loss below the significant lows of the prior downtrend, take profit slightly below the prior all-time high. Next, MSCI India. MSCI India is an ETF that since a long time uptrending. We had pullback, a new all-time high, another pullback to the prior all-time high in combination with this weekly uptrend line, supported by the 200 moving average. So I thought it would be a good idea to trade this ABC correction to the upper side if point B gets taken out. It slightly got taken out. I went long and now I'm nearly at my stop loss. Can happen sometimes. Stop loss was placed below the prior lows here of this ABC movement. And yeah, my expectation was that we will now see rising prices near the all-time high level, 2-to-1 risk reward ratio, risking 0.5% of my account balance. And we had also here a small MACD divergence to the side. Still can turn, but yeah, probably I will get the stop loss. But I'm holding a position, I made a plan, and I will execute it like planned. Next, MicroStrategy. MicroStrategy, also a famous stock in the crypto scene. Yeah, we have seen a massive rise and then a massive sideways consolidation with huge volatility in between. And yeah, I thought we would stop at this weekly uptrend line and we would see a break of this daily downtrend in combination with the 200 moving average. That would have been the moment for me to get in a long position, aiming for a huge risk reward ratio of 4.5. And yeah, staying with that below the first Fibonacci extension level. But yeah, it decided to crash lower, make a lower low. So yeah, the downtrend is still intact. I would maybe readjust if we see now a break to the upper side above this 4-hour support and now turning resistance zone and the 200 moving average. I would still go long probably in this trade, but I would readjust my stop loss to the lowest point of the movement, taking down my risk reward ratio a bit, but 3-to-1 still pretty good, I would say. Next, BYD. BYD is rising, sideways consolidation for a long period of time, and then finally the break above the sideways consolidation. We have seen a nice pullback back to this prior resistance zone, now turning support. And if you use Fibonacci retracement levels, we see that we stopped at the 0.5% level right with this support zone. 200 moving average at the moment above price, so bearish, but if we see that turn, so price gets above the 200 moving average, take out the prior high here in this corrective move, then I would enter a long position with a stop loss below the lowest point of this movement. For sure that can get lower. I would readjust then and aiming for a take profit of 2.5 times my risk, staying below the first Fibonacci extension level. The next, Ethereum. Ethereum, the cryptocurrency number 2 after Bitcoin. We have seen Ethereum was taking out the all-time high from November 2021, so that was bullish, but then for sure we had to correct. Not that worst, we corrected down to the prior weekly resistance, now turning support zone, but we collapsed a little bit lower than expected. We have this 4-hour blue dotted downtrend line, and I still think that if we get above that ABC corrective move, that I should enter a long position with a stop loss below the prior movement. So at the moment I would readjust that to the lower side. That would change my risk reward ratio, so we have to see if we get still a good one. Yeah, now you have to decide for yourself, how far will that one rise? Or yeah, maybe we could also argue that if we see break above A, B, C, so point B, that's still good enough for an entry, risking 0.5% of our account balances. Or you have to decide for yourself, like always. But yeah, that's probably the thing I would do to get a nice risk reward ratio and a stop loss below the prior movement. That's all I have for Ethereum right now. Next cryptocurrency is Ripple. Yeah, Ripple XRP in comparison to Ethereum looks a little bit more bullish because we haven't seen a low. We have seen this downtrend, the broken downtrend line, now a double bottom scenario. And yeah, my setup is still the same like last week. If we see this corrective move that was the breakout above this downtrend gets taken out to the upper side, I will enter a long position with a risk reward ratio of 2-to-1, stop loss below this 4-hour support zone for price, and the take profit below the second Fibonacci extension level. Next, the new ones you haven't seen. If you have watched my last video, they haven't been included. I found them during the week. So let's start with the new ones. BHP. Here, the last year's BHP group was in a nice uptrend. We have a longer weekly support and resistance zone. We have pulled back to that one, and the weekly uptrend line. The moment we have lost this daily downtrend to the upper side, which is good. We also have pulled back already to the 200 moving average, which is supporting the breakout. And if we now take out the corrective move to the upper side, I will get in a long position, stop loss below the corrective move to the downside and 200 moving average. And I would again aim for a 2-to-1 risk reward ratio, slightly above the prior all-time high here. But I think that's still reachable. Next, Gillette. For Gillette, we have to zoom a little bit out on a weekly time frame. You can see here a prior situation similar to the one today. We had a nice uptrend, then we had a huge consolidation forming a cup and T formation, cup and handle formation. You have the cup, then you have the handle, and then you have the break above the neckline, if you will. And then it was shooting up. We have a similar situation here, even bigger. We had this nice uptrend, then we had this huge consolidation forming out the bottom, rising then forming a handle. You could argue it's a handle. You need a little bit of imagination for that. And if we now break the upper line of the handle and the beginning of the cup, that is normally a bullish sign, and you expect normally a move to the upper side, the depth of the pattern. So a massive shoot to the upper side. I'm not aiming for that huge. So let's go on the daily and you see what I'm aiming for. Yeah, if you zoom into the daily, surprise, surprise, you can see another cup and handle pattern. It's a cup and handle stock, if you will. We have here the cup and here you have the handle. It's a little bit clearer even here at the daily time frame. And if we take now out the handle to the upper side, I will get long in this stock. Pretty convinced in that setup, to be honest. And yeah, stop loss below the handle and this daily support zone, risking 0.5% of my account balance, aiming for a 2-to-1 risk reward ratio and staying below the second Fibonacci extension level with this take profit. That's all I have for GILD. Next, EOAN. EOAN here on the bigger picture, but still staying at the daily. You can see here was the beginning of the stock. We collapsed first, then we found the bottom in a sideways range. We got higher and higher in these sideways ranges, and lately we have seen a massive push to the upper side, then a correction, and now we see that we found support here, double bottom if you will, and again rising. But the thing why I was taking that trade is at the 4-hour time frame. Here you can see this 4-hour support and mainly resistance zone. The 200 moving average, that's at the same level right now. And you can see on the 4-hour and shoulder, head and shoulder, so head and shoulders formation. Then this here would be the neckline, the 4-hour support and resistance zone. And we have seen the breakout above that. So I entered a long position with the stop loss below this 4-hour support zone and the 200 moving average on the 4-hour time frame, aiming for a 2-to-1 risk reward ratio. Wouldn't be much upside in the stock, but would gain me 0.5% of my account balance, because this stop loss is tighter than I take it usually, so it's more risky. So I'm only risking here 0.25%, so 1/4% in this trade to make 2 times more risk, so 0.5%. Next, I have the stock from AFLAC Incorporated. AFLAC is a long-term rising insurance company, nice long-term multi-year uptrend here in white solid. We're seeing now a flag pattern ABC, you can name it like you want. And we're seeing here on the upper boundary sideways consolidation supported by the 200 moving average, and now a breakout above that. And I entered after seeing this breakout with a daily confirmation that we have seen the breakout. I entered long at the moment near the break-even level. Stop loss below this sideways consolidation here and the 200 moving average, risking 0.5% and aiming for a risk reward ratio of 2-to-1. Stop take profit slightly below the first Fibonacci extension level. Next in the list we have Berkeley Corporation. I haven't known that company before I searched it up in the market screener. Berkeley Corporation here, you see a beautiful long-term uptrend. Would have been a pleasure to be long-term invested in that one. Haven't known the stock since lately. And yeah, I found this nice pattern you found oftentimes used for breakout trades. You see that price stops oftentimes at an upper boundary. You see an intake uptrend marking the lows of the uptrend. And if you use Fibonacci retracement level here, I have to correct it a little bit, then you can say you see the breakout. I entered already and I'm aiming for a 2-to-1 risk reward ratio slightly below the Fibonacci extension level number 2. Stop loss below the last significant low and the uptrend line. That's all I have for that stock. Next is Constellation Energy Corporation. Constellation Energy, not that long on the stock market, but since then pretty nice rising. We could argue we see here an extreme cup and handle formation. That would be the cup and that here would be the handle. And you can also say it's a breakout trade because we bounced a couple of times at that level. Haven't been able to get above that yet, but the moment we get above that, momentum is on our side and I will get into a long position, risking against 0.5% of my account balance, stop loss below the last significant low, and aiming again for a 2-to-1 risk reward ratio in that particular stock. Last on the list, Vertiv Holdings. Vertiv Holdings, lately pretty strongly rising stock, found also some resistance here at the upper all-time high levels. We tried it a couple of times at that level and got rejected every time, but we find a nice pattern here. You have the head, you have the two shoulders, head and shoulders with a neckline at the all-time high level. If we see prices rise heavily above that one, I will get into a long position, stop loss below the right shoulder, and aiming again for a 2-to-1 risk reward ratio. But yeah, that's all I have for this weekly update. All I have, I think I got plenty in this list that could have interested you, and maybe you are in one of these already in a trade. Let me know in the comments. Till next week, bye bye.